FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. As we continue our Trading with a Purpose series, we're looking at now pound JPY. So we're still coming off a peak formation low and we're still looking for buys. One thing I wanted to point out is if you're coming off this peak formation low, you did have a pretty decent retracement here at the very beginning of the cycle that you could have used as a swing trade. So essentially this could have turned into, you can see just by going up to the very top again, you're looking at a 3-to-1 risk to reward ratio on a swing trade that you could have held for a couple days here. So if you want to know how to use this, essentially just go back to the video where that has a thumbnail that says easy 1 hour setups. But regardless, we're looking for buys on pound JPY as we're coming off that peak formation low. So how many trades were available after the peak formation low was created? Let's take a look. Now, one thing I want to mention as well, you could see on a 15-minute time frame, this is all news. And so whenever you have candles like this, guys, you should expect a retracement. That's pretty normal for that to happen. So this is not surprising that we basically retraced the entire move back down again to basically cover the gaps that were left open from all the news that happened that caused all of this. So with that being said, if we go ahead and start looking at buy setups here, you could see here that we essentially get a type 3 pattern here on Friday. Now, if we take a look here, what is the actual setup itself? You're looking at something like this for 2-to-1. Type 3 setup during London. You don't get anything else here. So for this type 3, this railroad track here is too high to be considered in a type 3. You can see it's basically just floating between the top of the range and the bottom of the range. Obviously this one right here is where you want to go with. Now this is not a railroad track because the red candle does not cover at least 75% of the blue candle. So essentially you're just going off of the blue candle closing above the 13 EMA. You do get a slight pullback on the next candle. That pullback essentially is your entry. All right, and then you can see you end up getting a 2-to-1 risk to reward ratio on this particular trade. All right, now starting off the week on the 14th, you can see that coming out of the Asian range, we're basically consolidating right out of the middle. Now, I want you guys to notice this behavior here because you're going to see it again on different pairs. All right, if you see this behavior, now if you go back to my many videos that I've created on this about type 3 specifically, you know that I would tell you not to trade this whenever you have price action coming directly out of the middle of the range. Now, I've gone ahead and actually gotten plenty of examples on this specific looking setup, and I can tell you that with the data that I have now, these types of behaviors that you see when you see price action coming out of the middle of the range like this end up leading to a type 3 setup. So if knowing that data, you can now take essentially setups that look like this, that come out of the middle of the range like this and are just consolidating, you can expect essentially a type 3 to form out of this type of configuration. All right, we have plenty of examples showing, and we have data to back it up. Essentially, before we did not have the data, so I would always tell you guys to not trade it, but now that we do, I would tell you it's okay to trade this as a type 3 setup. So what does the setup here look like? Well, essentially, because all we did was consolidate here, the setup is not going to happen until we get this big blue candle. All right, now the ideal thing happened here on this example because you're essentially getting on the next candle a major pullback. If you could see that pullback basically almost goes the entire candle. So anywhere in that pullback essentially is your entry. A safe rule that I use is essentially 50% of the candle, and then from there you're just looking obviously to go again 2-to-1. This one here looks like you could have almost went you could have went 3-to-1 almost on this particular setup. All right, but very important factor is that whenever you see this behavior, I would expect a type 3 to happen out of this based on the data that we've gathered over the years. All right, going over to the next day, this right here is too early to be a type 3 for the simple reason that it's like super early. It's like 2:30 or so. If you did decide to trade this as a type 3, the only lucky thing that happened was the pullback on the very next candle that could have given you possibly a decent entry, but I mean you literally went almost 2-to-1 or right 2-to-1 on this. This is not a trade that I would take, by the way. I'm just letting you know that to me this is way too early, but again, some of you guys might think that this is just the right time, and that's perfectly fine if you want to trade it. This next railroad track here for me is not ideal because it's literally floating again in the middle of the top of the range and in the middle of the range. Now I know why it's doing it. It's doing it because the 50 EMA is holding it there as a form of support. If the 50 EMA was a little bit lower, then actually this railroad track would have been lower, and that is the ideal place that I would want to see a railroad track go to. All right, so this would not have been a trade here. To some traders, this may have been a trade, depending on how aggressive you are as a trader. There's nothing to trade for me in the US session. All right, so here we have, again, still looking for buys this entire time. This is essentially going to be like a type 2 pattern. The reason I say it's a type 2 is because it's literally price action is floating right below the low of Asia, right? It's not all the way down here. We didn't get an aggressive move all the way down here to make it a clear type 1 pattern. Now for this one here, all right, you don't really get a pattern on the second leg, so you would have needed to trade this on a smaller time frame, like let's say either a 10-minute time frame or a 5-minute time frame. Kind of just up to you on what you feel more comfortable with. But let's just say on a 5-minute time frame, I'll give you some examples here. On a 5-minute time frame, you have a railroad tracks here, you have railroad tracks here, you have 3 sets of different railroad tracks that you could have used as an entry, completely depending upon what time you're looking at this. Okay, now if you're looking at this super early, and let's say you were basically taking this type of setup here early, like this, right? This would have been essentially your setup. You would have gotten stopped out on this other candle here, on this candle, on this wick, right? And then you would have saw another railroad track here with another massive pullback. Okay, that could have been another opportunity for you for the same trade setup. I mean, this one honestly on a 5-minute chart, it would have been 7-to-1 risk to reward ratio. If you were a little bit late, there's another railroad track here again that you could have taken that as well on the trade setup, and then this one would have been over pretty quick 5-to-1 risk to reward ratio. Now, very important about if you were early and you took, let's say, a trade here on this set of railroad tracks. If you took this trade early on a railroad tracks and you got stopped out, that's perfectly fine. There's nothing wrong with that. All right. Okay. The question you got to ask yourself, are you able to take another trade, basically in the same area? The answer is yes. You can re-enter the trade as long as you understand that the reason that you were taken out is because you were stopped out because the market was grabbing orders that were below you. Okay. And you can clearly see that that is the case here on this example, right? There's going to be orders sitting below these lows here and obviously below this low. This candle wicks down, grabs orders that were sitting over here. Even on this other railroad track here, you see they go much deeper. So if you're taken out, and this goes to any other trade setup that you take, if you're taken out, okay, because they were grabbing orders, but you get another opportunity of a setup to get back into it, as long as you understand that, hey, they went down here, I got taken out because they went down to grab orders, the trade is still on, right? Because the low itself hasn't been taken out. Okay, the low itself hasn't been taken out. If you look, right, look at the wick here of this low, you can see where the body goes. It goes literally right to that wick. Okay, so we know what's happening here. All right, so as long as you understand what's happening and you see that, you can re-enter the trade. Okay, when you don't want to re-enter the trade, essentially is when they take out the lows here and then they just keep going. Right, they're not at that point, they're not stop hunting anything. That's just a direction that it's going. Okay, so there's a big difference. So you just have to understand the differences between the two, but you can do this if you wanted to. Now, if you're looking at it from a standpoint of a 10-minute time frame, let's say, then you could have looked at this right here as a star pattern, and you could have entered on basically the retracement of this red candle. Anywhere in this retracement, you would have basically entered. Okay, now you don't set the stop loss until this candle is actually closed. Okay, so just keep that in mind. But if you were to get in on this and then you got stopped out immediately, again, as long as you have another opportunity here to get in on the close above the 13 EMA, and the red candle is another pullback. So there's multiple ways essentially that you could have had an opportunity to get in on this trade if you got taken out by a stop hunt. So just understand that. Now again, this whole time we're looking for buys. There's nothing here on this day that I would have traded if I'm looking for buys. So here we are. There is nothing else obviously to trade. So we're essentially looking at from the peak formation, which happened on the 10th. So we're talking about close to 7 days, 7 trading days. There's multiple opportunities, 1, 2, 3 trades, okay, that would have been available here. And so here's the point that I'm trying to, or 4 trades actually here. Here's the thing that I need you guys to understand is the fact that you can see that in a 7-day period, there's maybe 3 to 4 trades that were good quality potential trade setups for us to trade. Okay, there's not going to be trade setups every single day. All right, you have to distinguish every day when you come in. Is it going to be a trading day or not? Okay, and if it's not going to be a trading day, that's perfectly fine. You have to stop yourself from trying to get into a trade that's not there. All right, so just please understand that from the get-go. Not every day is a trading day. During a week, okay, you should have maybe 3 to 4 trades max in a week. Okay, that's what you should average out. 3 to 4 trades a week. Good quality, solid trade setups that meet your actual trading plan. That's the important thing, is taking trades that actually meet your trading plan and stop trying to force a trade that's nowhere near your trading plan. All right, so that is the update for pound JPY. Obviously, still coming off that peak formation low, still looking for buys. We've been pretty much consolidating here for some time. So for me, I'm really looking for price action to break above 190,000. If it doesn't break above 190,000, then it's very likely that we're just going to end up just continuing to consolidate. The only good thing that we're getting here is honestly there's eventually going to be a break that's going to end up happening here. All right, we're pretty much going to be towards the end of a break here. Just know that that's going to end up happening. Whether we break up or down, I really don't care, but I do want to see a break so we can get out of this consolidation that we've been in. All right, guys, so that is pound JPY. If you like the content, do me a favor, give me a like, subscribe to the channel, share the content, and we will see you in the next video.